Rick Santelli is standing by at the CME in Chicago. Rick.
Yes, and it's dropping as if somebody thought they had the number, but they're wrong because it's hotter than expected. CPI for the month of September headline expected up 0.3. And many are saying if you extrapolate this number, we're in the twos. Well, it's up 0.4%, up 0.4%. Still don't see a revision to up 0.6 in the rearview mirror because, of course, up 0.6 was the highest since June of 22. Strip out the all-important food and energy, which is what I was referring to with that extrapolation. It hovers at up 0.3%. That is the second month in a row it's been there. We haven't had a revision yet. The prior 2 months were the lowest since February 21. We had back-to-back up 0.2, but it's now up 0.3. And year-over-year, 3.7. Year-over-year headline, 1/10 hotter than expected, exactly as in the rearview mirror. So that's 3.7 back-to-back. The recent low water mark there was 3%. That was in June. That was the lowest since March of 21. Now, this is my favorite year-over-year core, which, by the way, hasn't been below 4% since May of 2021, is now 4.1%, exactly as expected. However, we have made progress. It moves from 4.3 to 4.1. As I said, still haven't been under 4 since May of 2021, but 4.1% on its own is the lowest level since September of 21, when we were at 4%. Now, let's go to initial jobless claims expected up 210,000. Darn close, 209,000, and last month revised up 2,000 to 209,000. Back-to-back 209,000. Let's look at it this way. We haven't been at 250,000 since the first week in August, just to put a face on it. And continuing claims, always a month in arrears, actually popped the handle. Expecting 1,675,000. It barely popped up above 1.7. 1,702,000. And in rearview mirror, a subtle upward revision from 1,664,000 to 1,672,000. We haven't been above 1.7 million since the second week of August when we were 1,719,000. Suffice it to say that interest rates have moved up a bit. If you were to look at a two-day chart, what you'd find is that today we are looking at two-year note futures above yesterday's high yields, never dabbled below. 10-year, on the other hand, are aiming for yesterday's highs, but still haven't come to it, but have done some work under yesterday's lows. So should we start to trade above yesterday's highs, we could call this an outside day. Technically significant. I would pay attention to that dynamic. Becky, back to you.
All right, Rick, thank you very much. Again, we're watching that jump right now in yields and a little bit of pressure on what we've seen with the futures. Stock futures have given up some of their gains, but you're still talking about them all in positive territory. Steve Leisman joins us again right now with more on what he's seeing on this. Steve, what do you think?
I'm looking over it. I mean, obviously you had a pop in gasoline prices, up 1.5%, maybe a bit less than had been expected, but still, that's a big number to the upside. I'm looking at used cars falling 2.5%, apparel falling 0.8%. Looks like there was a bit of a surprise in shelter. I just want to scroll down here and see if I can find the owner's equivalent rent. That was 0.6. Yeah, it ticked back up, which is kind of contrary to expectations. On the other hand, we did have a decline in medical services. We're down 0.3%, or sorry, up 0.3% on that, and also transportation services were up 0.7 with a 4.9% increase in airline fares. That may also be passing along higher higher fuel costs into the ticket price there. I think this is the kind of thing that tests the market's mettle for figuring out, is the Fed really done here? I think it is, and I think there is some tolerance for this kind of oscillation in the number, a bit of higher on the headline, but right in line on the year over year when it comes to services. And while I'm talking here, guys, I just want to see the Fed probabilities, if they have changed at all. And they did a little bit for December. They remain below 10% for November, and they're up slightly above 30, call it 33%. They were down below 30% before we went into the number here for December. I still think the Fed is on hold here. I think there's some tolerance. But again, as I said, the data has to behave. We have to be in this situation where the Fed can be confident that inflation is gradually coming down. But so far, what I've heard from Fed officials, the burden of proof is on hiking again, not on holding.